Good evening, everyone. This video is going to be a trading review and support session for January the 18th, 2023. So today was a beige book day, and they were waiting on the data, but they started selling off even before the beige book, but it was kind of jumpy, uh, you know, this morning, and it really hit the an all session low prior to the beige book release, and then later on in the afternoon it went down. But let's try to get into the trading. So the market was kind of, I was commenting today that the market was doing a pretty good job of hanging around here around the 200-day moving average, which it was for a long time. Now, later on in the afternoon, as we'll see, it did come down and actually went through the 50-day moving average, and so it held up for a while this morning, and then they decided to take some money off the table from this 200-day moving average with the beige book coming out. And if we take a look at the big picture chart, you can kind of see here's the London Open. As you can see, it really wasn't that um, um, you know trendy. I mean, it did pop up here, right? And then 530 News came out with the producer price index. It didn't necessarily like that and brought it back down. And then it really wasn't doing, I mean, while we were, here's the market open. So as you can see, for a while after the market opened, it really wasn't doing too terribly much. And then it did make a little bit of a high, and then it finally just started giving up and gave up and gave up and gave up, gave up all the way down. So I mean, too bad. And like I was saying, I had my head in software and wasn't around the computer all day long. But it would have been a good day to continue to trade. But so it goes sometimes. So let's go through the trading that I did do, and you'll see kind of how it market was a little bit jerky. All right, so of note, the R1 area had been kind of resistive for some time, so I hit the button before this bar was done, as it was breaking through the 5 minute close here, but then it actually bounced back up and ended up here. So I'm short here, right? Then it came back up to the minute average. I'm still thinking it probably wants to come down, so I added one there, and then it came back up into this resistance area R1. So some of these arrows are black because I just couldn't see them otherwise. So I was in 1, 2, 3 units, which allowed me to get out here, right, prior to it even coming down and testing the 3 minute moving average. It ended up coming down even below the VWAP. But that was a 3 unit trade, but I ended up making money on it, and then did something kind of similar on the next trade. So let's see. I am all right. So it's kind of breaking out again, and I traded, almost got out, but not quite. I traded here, right, uh, prior to this bar being closed, coming off of this area. Really, maybe if I had gone short in here, I would have gotten out anyway. But this the fact that it was kind of coming down into the VWAP again, it held. All right, so here's one added to it again here. This is probably too soon, right? And it's because the difference in the entry points is not that bad. I did want to get my exit above the VWAP though, right? So that was kind of the thinking there. It ended up going one more time back up, and then a big bar down. I added to it a third time. So again, two consecutive trades with 3 units, and but it did allow me to get out, well before the VWAP. So two consecutive winning trades, but both had 3 units. Next one was easier, right? And it's still kind of making lower highs and lower lows, and so this one was a little bit in a better position. So I took this trade after this bigger bar, right? So it hit the minute average, and the 25% upper line, and gave a bigger bar down than the up bar. So big bar, little recovery, big bar down. So I got in here and I was actually out here without any problems. Same way here, right? It hit the 2 by 200 here, and actually the pivot point came back up practically to. I mean, this was practically to the EMA area, but and also the VWAP big bar down after a couple of bars. So I went ahead and did there, and it was out there. So first couple of trades a little bit difficult. Next couple were easy. And so I'm still trading, but thinking about slowing down. So, but ended up taking another trade here, right? Maybe a little bit late. I mean, it's just kind of one of those decisions. I said, okay, well, I'm going to go ahead and do it. And so was long here. Here's the arrow, and out quickly. So now 3 pretty easy trades. And then I got into, I think it was before 7 o'clock. Got into a little bit more difficult trade that caused me to sweat a little bit. It wasn't that bad of a setup. It is kind of getting pretty close to coffee break time. So I entered in this trade at 47.50, right? So coffee time starts at 48. So and it wasn't badly aligned, right? It was kind of moving down under the 3-minute close, under VWAP, but it had been, notice these tails, right? It had been kind of jumpy in this area. And sure enough, I enter in here, right? And it's starting to go against me. But overall, I'm not too enthused with the market. So the second unit was actually a little bit of a accident. I didn't really make a decision to do here. I think sometimes when I turn my head, it must move my finger enough to enter in a trade. So that one was kind of by accident. Here, when we're getting back up into this R1 area, where it has been, so you can see it's resistance and resistance again. And I didn't really think we had enough news for it to be positive today. Again, we're kind of over that 200-day moving average, and I'm just kind of waiting for it to roll over some. So added to it here, came down here. So because the first entry was way down here, right? So I needed to improve the average, and this allowed me to get out. So I was out of the trade with some profit, not a lot. Right, since I was a little bit heavy and kind of counting on a movement down, I settled for lower profit here than I normally would have if for instance when I was down here, but I paid for the commissions and added some profit to it, and so in doing that, and then I think that kind of scared me a little bit because I had already been out up quite a bit. So okay, I didn't want to trade anymore during coffee break time, not even during the push time frame. So now we're here at 7 o'clock, and I think I have 2 more trades to go before I'm done trading. Let's see, I gotta find them. Here it is. So here's the one trade. I've been writing. I would have gotten out somewhere around here. I've been trying to write out on the video so I can the text is easier to pick up than these arrows sometimes. So there's a quick trade, and I got one more. I didn't need to trade anymore, but I said okay, I'll pay attention until that mid hour kind of time frame. And so here it is. Right, sometimes it just shows up a little bit. So it's not, you can't exactly predict it, but it had been going sideways. So here it is, just a little bit, a few bars after 7:18. Right, so and that's my last trade of the day. So entered here and out pretty quickly. Came all the way down. again to the 2x200. You can't necessarily predict where it's going to travel, but anyway. So that was the last trade of the day. 10 3/4 points gross per unit. Let's just for fun. And so now I'm working on software. So let's just go through because I know it got a little bit more. So here's kind of like the breakdown. No particular volume. I mean volume here, and it kind of breaks down everywhere. So that might have been okay. Back up to the EMA. This is a pretty big jump here, right? But this test of the EMA here, again, bar up, couple pretty bars down, and then back down to the 2x200. You had enough room to get out of there. So there's a couple. Now it's appearing to be angry, and now they're selling at the 2x200, right? So that might be okay, depending on where you took it. I mean, it's kind of angry, so it just goes right through the pivot point. And now you had to wait a little bit. Now it kind of comes back up, not completely, but right, it tested the pivot point in the EMA here, and now it's starting to hit it, right? And you're still not even in the EMA band, and all the flexes are heading in the right direction. So that would have been an okay trade. Now you have to wait. This one was a little bit more dangerous. I mean, it is testing the EMA, and it worked, but you're above the flexes, and sometimes these don't go your direction, right? You get above slow and fast, and sometimes it's going to hang in there and go the other direction on you. It just was a sell-off kind of a day. And so there was 3 easy ones. This one is, it's at least you're back aligned with the flexes and the linear regressions again. Pretty good rejection here. Maybe you see this volume and try to go for it again, right? So that would, you had to kind of watch it. It always makes me nervous when they're a little bit congested here, because sometimes they hold and can go back the other way. If it's closer to the EMA and moving down, then that's a little bit better. So there's 4 that you could have taken, and it's not 8 o'clock yet. 4 additional trades, and then back up. I'm ignoring anything on the long side. Notice it didn't have that much buying. Back up to the minute average. What's it going to do? What's it going to do? This looks fairly inviting, right? I mean, it just kind of did this big loop. It's above slow flex, but I think that's probably okay. It's kind of hitting it pretty good with volume. It takes a second to go down. So if you're really trading, then there's another 5 points. So, could have been close to, at this point, could have been 16 points. But, I'm just going to quickly go through and say, yeah, if you've been aggressive, just look at everything you could have gotten. I'm not going to go with any particular trades. I'll get into. Let me jump this way, because it ended up being after and see, this one is even mid 9 o'clock kind of time frame. Everything is pretty well aligned, making new all session lows. And remember that Beige Book comes out at 11. I mean, this one is pretty well aligned, right? Coming back down. If you wanted, this is going into the Beige Book area, right? I mean, everything looks pretty good. Everything would have worked, but it had been down all day long. All right, so Beige Book comes out, and it's kind of wacky. Let it settle out some, and then where does it really start to get tight? Here it starts to get tight again to the downside, right? So down it goes. Little jumpy here. So price action is going, when the slow flex starts to look weird, it's because price action is going above and below slow flex. So you get these little gaps in there. I know that looks a little bit weird. And then even after 12, not a great. Sometimes it's okay, if you wait till about 12:30ish. Look here, 12:30ish, right? Another push down. So it could have been even a better day. I mean, but if I could get 11 points, close to 11 points per unit every day, I'd be pretty happy. Um, so had to push a couple of trades a little bit today to get that, but so it wasn't super efficient, but efficient enough. Um, so hopefully, I have got that little software thing figured out. Tested it. It seems to do its thing more, a little annoyance thing more in the morning when the markets may be quick. And so I'll look at it again tomorrow morning, make sure everything is okay. And then if it is, I can start thinking about the next release. And pretty much the next release is just these visual enhancements that I have made. Um, I have shown this. I don't know if you'll be in the room tomorrow morning or not, but I have shown this. But I have taken, just for visual purposes, I took the fast zone shade away and that shade between ultraflex and fast flex. I took the little outline of the EMA band here away, um, and so just those are the things I've taken away from the chart. In addition to the visibility things like adding the enhancements to the 2x200 and the VWAP, just so you can see them when they're in these areas. And you can still pretty much see them. Let me go find, because I think we had some today, just so you can see them when they're in the band. Well, there's the 3-minute moving average, but it was always enhanced. Maybe it didn't show up today. Oh, there it is. I thought I had seen it. This is the 2x200, right? So I added the enhancement. So you could see it here anyway, right? Because of the changing colors to EMA band. But now you can even kind of see it. It may look a little bit weird, a bunch of black dots, but even if it's in the upper EMA band, you'll be able to see it, because you'll wonder what are those black dots, and it'll remind you to look over and see what that is on in the text area. And here's VWAP, right? So you probably wouldn't have really been able. It's a little bit different color, but you probably wouldn't have been able to pick it up if easily if it weren't for the enhancement. So those are just some of the things that doesn't really change trading philosophy at all. It's just a matter of just getting the most important stuff on the screen a little bit cleaner, a little bit more visible. I think, taking a poll, nobody has disliked it yet. So I think the vast majority have said that they like it. And so I'm leaning towards this being the default when I'm shipping out the next set of indicators and TMLs. And if you like the way it was before, or any aspect of the way it was before, it's under your control. So we can always tell you how to get it back to where it was, either in the input sections or adding the specific indicators that are now separate, like the fast zone, if you chose to. But they probably won't be there. I'll include them in the package when I send it out, just in case somebody likes it or wants to play with it. But I'm likely leaning towards it not being on the chart as a default. All right. Any questions or comments? Okay. What made me stay short? Let's go back to that area and even let's go back to where it was even before Let me go back on my other chart, like where I can see just a little bit more. Okay, so right after the let's see at the 6 o'clock time frame. So before the market opened, right? See how R1 just didn't have the gas to get over R1. All right, so that was one area, and then the next area was after the 5:30 news, and it was a little bit more excited because of the news, right here, right. R1 is still kind of um, holding as resistance, and then it came down. So I had those two aspects working in my head when I was saying, let me go back to where I was at, and if I had chosen to, if I didn't have that in my head, I'm getting back to here, right? Market open. Here's R1. If I didn't have that in my head, right, and decided to go in the opposite direction, it was a little bit aligned, but since I was here and R1 was going up into here, right, then reversing and adding would have probably, well, it wouldn't have worked very well at all, right? So I was kind of counting on the R1 area to act as resistance again if it went all the way up there. It didn't even go all the way up there, but I did get out there, right? And then kind of the same, here I kept with it. That one was an easy one. Let's go back to the one that was a little bit of a trouble for me, the one I had 4 units on. And I was wondering, what the heck am I doing trading during or this close to coffee break time, right? So this is still in my head. So here's R1 again, right? So R1 is still in my head. And so here's the first one, right? Not a horrible trade, but these tails should be maybe a little bit of an indication, right? Came down to this area, and they're trying to pop back up. They're really just not doing too much, right? And so that was one. Like I said, this one was a oopsie, and here it comes into to R1 again, and so rejection at R1, and I add rejection. Well, I mean continuation, and I add again. I don't know that it's coming all the way down, right? But I do know that R1 has been resistance, right? And if it had blasted through it, I would have had to bite the bullet and either close and or reverse. But I just didn't. Today, I did not necessarily see that happening, especially with 7 o'clock news coming in, right? And the market has been ready. I guess they said, the big people were saying, well, watch out for maybe a pullback. I mean, we've in this market we've been pulling back at some point every time it's been around the 200-day moving average, right? I mean, so that's in my head. R1 is in my head. Oops, hang on. Let's get the daily back up. Every time it has come up, even when it's been on some pretty good uptrends, right? Can't hold R1. Didn't even quite get to R1. The 200-day moving average, right? Got pretty excited here. This was a news-related event on that particular day, but couldn't hold on to it. So it's 1, 2, 3, 4. This is the 5th, right? So what happens in these kind of markets? People who are much bigger than us, right? And they may have a lot of money in the market. They use these areas as profit taking opportunities, right? I mean, they're longer term traders than we are, but they say, okay, hey, this is an area where we're going to lighten up and take some profits, and they'll let it come back down and wait for the next opportunity, maybe to skew their holdings a little bit more to the long side, and or they just or are they just are still lightening up their position, right? They're still lightening up on equities and then moving money into fixed income, right? So until the market, and this is the part of the scenario where like, hey, don't this is an old trading motto, right? Don't fight the Fed, right? And the Fed is raising, meaning the Fed is raising the interest rates, tightening monetary policy. Um, you know, the tech industry is trying to adjust from their pandemic boom, right? I mean, just today, all the big tech guys are laying off, uh, you know, uh, over 10,000 per company. Amazon, I think, is a much bigger employer. I think they're even laying off more than that. So it's just kind of the environment that we're in. So I don't think anybody's getting really excited for some big upside move for a while. I mean, and big companies are still adjusting to all the hiring that they did for the tech companies, because the tech companies had a little bit of a boom there, right? Because everybody had to buy some tech gear to work from home, right? Well, that's over, and so everybody's kind of adjusting their spending profiles, and they're having to take some headcount down. So that's what that is. I mean, people who are not real positive on the market, right, are using. I mean, that's profit taking and or lightening up, right? If they're really smart, maybe they got long here when it was going up, right? And then maybe when they took out this this pivot, right? I don't know if they would have stopped out here, but took it to there. That's some serious long term trading, and they may have been doing it on of course equities, which aren't margin based, so you can hold an equity that isn't a leveraged investment a lot longer, and then selling it or lightening up when it hits the 200-day moving average. That's just a thing. All right. Anything else? It'll be interesting to see what it does tomorrow, if it's going to continue more of a downward trend. Well, it comes from looking at it for so many years, and but even with all that, I still like this style of trading. Um, so you don't have to predict, hey, am I going to go all the way up to the 200-day moving average where it's at, you know? But more profit is available if you want to trade more. I'm just waiting till I really, really get all this software finalized, and maybe I can trade a little bit more. Don't need to trade too much more, a little bit more. All right, anything else? All right, let me get this video going then, and we will talk to you again soon. And I'll try to get this software in the process of being wrapped up. I'm crossing my fingers. I think it's going to be okay tomorrow morning. So we'll see. All right, have a good evening. Talk to you later.